Hello traders, welcome back to another video. So on this video I'm gonna be simplifying market structure to a point whereby at the end of this video you're gonna understand how to map out your market structure and successfully trade this way that I am trading, guys. Now, so as you can see here, we have an example of a textbook example of an uptrend, and we have the liquidity range here. Then you also have a downtrend. So I'm just gonna explain a few things around here and also show you like how you will get to see like the market structure on the live charts, just because these are simple examples whereby they just giving you like an illustration on how to map out like your structure. So as you can see here, we have your low, then you have your high, then you have your higher low, then you have your higher high. So after having a higher high, normally you expect a break of structure, and then after having a break of structure, what you need to do is look for an area of value, guys, né? And then that area of value should be below the 50% zone, guys. You need to use your Fibonacci tool, and my Fib tool is a bit simple. As you can see here, these are the zones here, or these are the numbers. You have your 0, your 1, and your 0.5. And normally what you need to understand is that you need to be buying below the 0.5 and selling above the 0.5, guys, né? So let's say maybe you have this type of structure whereby you take your lower high to your higher high, and then below this green line here is the 0.5. That is where you're going to find a nice area of value, or a nice supply area, guys, né? Or a POI, however you want to name it. And then as you can see here, you take your buys within this point. Let's say maybe for example you take your long within this point using confirmations, maybe on the lower time frame, or taking a risk entry, it's still okay. And then you're targeting the previous high, just because the previous high, it's the one that has liquidity, and that's the one that is weak. Just because we're looking for buys, we are taking out all the highs, guys. Now, so after having the market taking out this high, it means that we have a new break of structure. So we can clone this thing here, and then this is your new break of structure. And like I said, after having a new break of structure, there must be internal structure here, or the order flow coming in, so that we can have like your Fibonacci 2 from the low up to the high. And then at that discount area, that is where you're going to buy, guys. Now you buy at the lows. As you can see here, after buying at the lows, the market will take out the previous higher high, and then that is where you take your profit, guys. Now just like that, the market will keep on pushing up, taking out the highs, and then giving us those nice buying opportunities up until we get a change of character. That there is like a concept called a change of character, whereby the market will no longer be respecting the lower high. Instead, it will be taking it out like this, and then after taking out the lower high, we have a change of character, of which we classify it as a CHOCH, guys. Now, so the CHOCH is just like this. So I'm gonna use a CHONCH, guys. Now, so that is your CHOCH. And then whenever you have a CHOCH, it means that we have a change in trend, guys. Now, previously we were looking for buying opportunities, and now since we had a change of character, we are going to look for selling opportunities, or this type of structure, guys, now, on our charts. So after having the change of character, you still need to use the Fibonacci tool from the high to the low, and then the 50% mark, it will be an area for you to buy, guys, now, at the extreme zones. So you're just gonna wait for the market structure to realign with the overall trend that we are in. So the internal order flow will be moving like this, and then tapping into this area of value, we get a change of character on the lower time frame, just to confirm the realignment, just because we're still in a buy trend on the internal order flow, guys. Now, so let me just remove this and show you the change of character here. So let's say we get a change of character within this point, then we have a fair value gap or something that's going on there. That is when you get to take your selling opportunities within this point. Sorry about that, guys. Now, the charts are a bit messy, but like, I hope you understand everything. So as you can see here, this is what you need to be trading, guys. Now, this is what you need to be trading. And then getting into the liquidity range, guys. Now, so the liquidity range is a bit simple, just because we don't trade like ranges, but like we need them so that they can give us like some type of liquidity or money in the markets, guys. Now, so let's say maybe you have your sell side at the top, then you have your buy side. So you just need to wait for the market to take out either the two of the areas. Let's say maybe we take out the buy side liquidity. After taking out the buy side liquidity, we need a market structure shift within this point to target the sell side liquidity, guys. So that is how we use like our liquidity on like our charts. Or for example, let's see, maybe we have this structure going on, and then the market pushes up and then creates some type of liquidity like this before breaking structures. So after getting that break of structure, you'll already know that we had a liquidity within this point. So let's say maybe we have liquidity here, and then we also have liquidity within this point. Or let's say maybe this is an Asian range, for those who know Asian ranges. And then after having that Asian range, we know that the market has to take out the lows. After taking out the lows, then that is when we are going to be buying nicely, just because we have liquidity in the markets. And then that is where the big boys need to be in, guys, so that we can get those nice pushes to the upside. So getting into the downtrend, as you can see here, we had a high, then we have a low, then we have a lower high, then we have a lower low. That means we have a break of structure in hand, guys. So let me just clone this one here so that I don't waste your time. So we have a break of structure, and then we use the same rule, guys, from the high to the low. And then at the 50%, that is where you're going to find the zones, or supply areas, whereby maybe you can find 2 or 3, but like I like to get one with like a fair value gap, and then maybe the other block will be at the top. That is when I'll be entering the trade maybe at the fair value gap, using the order block as like my stop loss. So let's say maybe this is your entry, then you're targeting the lows, just because we know that the lows are weak, just because we are looking for selling opportunities. So after having the break of structure, we pull down, then we pull back into that area with the internal order flow, then we realign at the top of the structure around here, we push to the downside, we get a new break of structure within this point. So after having a break of structure, what we normally do is what we look for our Fibonacci tool from the high to the low, and then whenever the market reaches into the 50% zone, let's say maybe we have 2 areas of supply. We have this one here, and then we have this one here, then we have another one at the top, just like that, the extreme zone, guys. So we have 2 areas of value, and then let's say maybe this one does not have a fair value gap, but like the second one also has like a fair value gap, maybe within this point here. You need to be taking that one with the fair value gap, just because fair value gaps need to be filled, and then sometimes they tend to be like liquidity in the markets, guys. So whenever you have that liquidity area, just use it as your entry trigger, and then your stop loss should be just above maybe the order block, or above like the high, and then you're targeting the lows, just like that. So that would be like your entry criterias. And then like I said, most of the time you will have like a change of character. So let's say maybe, for example, the market was pushing to the downside, we have a new break of structure like within this point here. So around here you have a new break of structure, and we already know that we need to use like the feed tool from the high to the low, and then we have an area of value here. Let's say maybe you have your supply area here, that is where you need to be selling. And sometimes the market will just push to the upside, take out like this area of supply, and then give us a change of character. So just like that, let me just clone it. After having the change of character, we already know that the structure has changed, guys. Into selling opportunities, now we'll be looking for buying opportunities, and this BOS tends to liquidity, guys. And then after that, we need to be using our fib tool from the low to the high, looking for the 50% zone. And then after that, we wait for the internal order flow to push to the downside into areas of value. So let's say maybe we tap into a nice area of demand within this point. After having that, we move to the lower time frame so that we can find entries. So on the lower time frame, we just need a market structure shift like this, and it's still a change of character also. Then after having that market structure shift, we use this low here as our liquidity or our confirmation also. Then we wait for the market to dip down into an area of demand. That is when we look for our buying opportunities, targeting the previous high, of which it's this one here. Then after targeting the previous high, we already know that this is taken out, then there is an internal order flow coming up, and that internal order flow will just push to the downside, reach an area of value. So let's say maybe we use the fib tool again from the low to the high, then we get an area of value again on the 1 hour, or maybe for example or the 15-minute time frame, we switch over to the lowest time frame, maybe the 5-minute. That is when we get another internal change of character, of which it will be around here. Then that is when you take another entry, and then in that form you are following the structure. Is because this is a break of structure. Sorry about that, guys. So this is how you need to map out like your overall market structure, so that you can get to understand everything that's going on in the markets, guys. And getting to the complex stuff whenever you're trading market structure is that there is no way that the market will move like this, pushing up and down straight in a straight line, guys. So this is what normally happens. You get a push up, then you get the internal order flow pushing down like this, then you get the market structure shift within this point, then the market pushes to the upside, continues with the overall trend, breaking structures. So let's say maybe this is your break of structure. So just like that, we have a BOS, and after having that BOS, we already know that the internal order flow has to come up, maybe change of character around here. Then the market will just push to the downside. And don't forget that this low here is protected. Whenever this low is taken out, that is when we have a change of character, guys. And then this low here, let's say maybe this is an area of value, and then the market has moved, and then we had this as our previous change of character or internal order flow. And then as you can see here, the market pushed down, tapped into an area of value. Then that is when we get that market structure shift within this point. Then that is when we get to buy, guys. So around here, change of character or market structure shift, area of value, then we look for buying opportunities, knowing that this high here has to be taken out. There is liquidity at the top of the structure. So this is how you need to be mapping out like your overall market structure, not like this, guys. Not like this. This is good for you to just learn how the market moves, but like it literally moves like this, guys. So this is the outer structure, or this is the outer structure flow, guys. As you can see here, we have your low high, and then there comes your lower lows and lower highs within a trend, guys. As you can see here, then the lower low, then the higher high, then the higher low, then you have your higher high. But like the market has to move like this, whereby you get like structures within structures, and then this is internal order flow, like I told you. This is your external order flow, or this is your external structure, and then this is your internal order flow, guys. So you need to learn these things and get to apply them on your charts, and maybe you'll see a difference, guys. So I'll see you on another video.